First up this afternoon, we have a panel of finance heavy hitters who are looking to uncover the future of money. Please welcome to the stage Mark Cudmore of Bloomberg, who will introduce his panel. Thank you very much.
Good afternoon. I realize everyone's a bit sleepy after lunch, but thankfully, I have an absolutely amazing panel to discuss the future of money. This is great because I don't know the answers, and luckily they're going to do all the talking for me. So first up, I have Namita Lal, who's the global head of mobile money and e-commerce at Standard Chartered. Then I have Alokik Advani, who's the managing director at Goldman Sachs. Then I have Sreeram Iyer, who's COO at ANZ Banking Group. Then I have Stuart Ward, who's Director in Financial Services at Salesforce. And last but not least, Daniel Cohen, who's an SVP in Digital Solutions at Mastercard. Welcome. Thank you. So just to wake you all up, we're going to start with the issue you all want to know. Are cryptocurrencies the future of money? And if so, will there be one globally dominant cryptocurrency, or there'll be many different competing ones? What characteristics will it need to possess? And if you don't believe in cryptocurrency, why not? What's the fundamental flaw? So I'm going to go to you first, Alokik, on that one.
Sure, thank you. That's clearly a very, very large question, which a lot of people are focused on. I think is it real? Is it here? It definitely is. Is it mainstream yet? I think at a retail level it is. Institutional, we're not there yet. And is it the future of money? I don't think it's still used in any shape or form to do any transactions, and hence it can't be a future of money. I think the most liquid tokens like Bit or Ether or others, the structural deficiencies in them, either in the velocity of the number of transactions that you can put through, in the validation of the actual transaction itself based on the blockchain, don't allow it to be used to buy a cup of coffee or to be used to make a small payment to somebody else. So it hasn't quite got there. The underpinning technology and the possibilities around it are quite powerful if we can significantly magnify the number of transactions you can put through. So instead of doing 10, 20, 50 of them a second, you may need to do hundreds of thousands of transactions a second. And I think if you sort of go back to its core as to what's holding it back a little bit, there's a few different things. While people believe in the strength and the validity and the security around the chains itself, so for example, the Bitcoin blockchain or any of the other chains that exist, the platforms that facilitate some of the transfers, whether it's exchanges or custodians or others, they're the ones that are vulnerable right now. So I think the ability to make this into a mainstream, we need to make people have more faith that their tokens, when they're being held in a wallet or an exchange or a custodian, aren't going to be hacked or stolen or taken away from them.
Okay, so in summary, crypto's here to stay, but not ready to be dominant yet. Sreeram, I'm going to turn to you. Do you have any other kind of view on that?
One of your questions, thank you for asking it, was would there be one large example of a crypto that will apply universally? Today, if you travel around the world and think about it, we don't have an electric point with 3 holes, which is standard around the world. We need an adapter. So it's very unlikely that the world will come to an agreement as to what that one currency could look like. There are, in my view, some flaws in the way it is today. One, it's not a store of value backed by a sovereign entity like a central bank, so the value of that could go to zero. Second, it doesn't assume the existence of a trusted intermediary like a bank or a central bank. So in the absence of that, there is always a long-term question mark on who do you rely on in the event you need to rely on someone when things go wrong. And third, the technology, which is very powerful, as he said, does lend itself to risks around security. So there is always the need to continuously invest to be able to just keep it going. So with these 3 flaws, if you like, as of today, I don't think what you asked in the beginning, Mark, is likely to happen.
Okay, more work to be done on cryptocurrencies. So after that kind of starting off on cryptocurrencies to grab your attention, we're going to go slightly deeper on the philosophical stuff. And Daniel, I'm going to go to you first because I know this is important to Mastercard, but our new financial technology is going to tighten or exacerbate the kind of growing economic inequality gap we've seen in recent decades.
So I don't know if a lot of you know our Mastercard CEO, Ajay Banga, who's from India, is very focused on financial inclusion. And what I don't think people know is when Mastercard was IPO'd in 2006, it was one of the only and one of the first companies that set aside 10% of shares. Now, Mastercard IPO'd at $39 a share on the New York Stock Exchange in 2006, and I think we closed yesterday at about $196 a share after a stock split. So that's about 1,960. And so for those of you that are really good at math, the Mastercard Foundation is now moving billions of dollars around the world, focused mostly on water, solar energy, making lives better. A lot of it in India, a lot of it in parts of Africa and South America, which is the region I come from. So I think there's this movement to have financial inclusion, and what better way to give someone a MasterCard, even if it's a prepaid card, so that they can participate in the sort of formal financial world of financial services.
Stuart, any kind of thoughts on that?
Yeah, I think if you look, there's a few examples. In Africa, M-Pesa is quite an impactful story brought out by Vodafone. Gives people the ability, the unbanked, to make payments, to receive micro loans. Salesforce has empowered a number of small to medium enterprise lenders, Prosper, Pepper Money. So we really feel like these new financial technologies are empowering, are reducing the gap, particularly in those unbanked areas. And what you'll see is that because there's not a legacy built financial system in many cases, these largely unbanked nations are in a position to kind of leapfrog and really adopt these newest technologies very rapidly.
Okay, I guess tying on from that, how will the payment transaction system evolve in the next couple of years? Will cash die out? Will biometric payment systems take off? Will there be a globally standardized mobile payment system? Namita, looking to you for that.
Pretty fond of global standardized systems, right, Mark?
Absolutely.
Ain't
Makes
going
it
to
simple
happen.
for me.
Yeah, ain't going to happen, I think. But cash is an interesting dynamic. I think what you rightly said, Asia, Africa, Middle East, about 70% of the consumers in these countries are unbanked. They have no bank accounts. So there is no question that alternative technologies will develop to bring about financial inclusion. So we've already seen the wallets like M-Pesa, Tigo in Africa. We've seen the GCash, Paytms in India. We've seen Alipay, 10 cents in China, and they have attempted to remove cash. But what is interesting is that I was reading statistics that cash, which used to be 8% of the GDP globally, is actually now 10% of the GDP. It's actually growing. The number of notes and coins is actually growing. I think a couple of reasons for that. One is that as e-commerce is growing, strangely, the usage of cash for e-commerce is also growing. So you talk to the e-commerce companies, one of the biggest dilemmas they have is that they're using technologies to send shoes to Thailand, but the people there want to pay in cash when the shoes arrive. So e-commerce companies and courier companies like DHL are becoming cash collections agents. So that's an interesting thing. And the other thing is that always surprises me, and we were talking about this at lunchtime, is that US, Europe, Japan, a large extent Singapore is still heavily cash payment oriented. You would be surprised, 20% of the payments in Sweden are in cash, 80% of payments in Europe are in cash. Because obviously that includes the small payments, right? So 80% in cash. In Japan, it's about 60%. In Singapore, I'm sure a lot of you still pay in cash. So it's not going anywhere, it's not disappearing. In fact, it's actually increasing. So yeah, interesting opportunity for more fintechs to arrive.
And where do you see the opportunities, Alokik?
I think that's a very valid point, right? Well, we all see one side of it in your face constantly, which is the revolution, the technology changes, very clearly said. Paytm, Alipay, Tenpay, all of these completely cashless. In China, you can walk around anywhere you want to go and never touch cash. But then you come to somewhere like Hong Kong that's supposed to where I live, and it's supposed to be quite revolutionary, and the first thing you need to do is pay cash to a taxi driver, because there's no other way to pay them. You can try your damnedest to use anything you want to, but there's no other way to pay for it. So I think that we still have a ways to go to get cash out of the system, but then I think to the other point where you've got some quite well-developed financial markets, as described, that are still significantly cash-based. And so what's causing that? Is there a trust in the system? Are there intermediaries that are causing that? Are there friction as a result of regulation? I think it's all of the above in different circumstances where we need to get to allow cashless to be a significant part of the ecosystem, right? So I think there's a clear view in Japan where I think by 2025 there's a strong move to move as cashless as you can, at least from a payment perspective.
Just to add another interesting dynamic, I'm doing mobile money and e-commerce in the bank, and 4 years back we actually thought that this whole technology revolution is going to remove cash. Interestingly, in the last 6 months, all the stuff about Cambridge Analytica, the data stuff that's happening, is actually going to put us a little back in terms of how these technologies will be adapted as adopted. In fact, there are lots of regulations probably going to come in to look at how banks are easily connecting with some of these fintechs, etc., to see whether they are safe, they're secure, clouds under question, and all of that. So I think it almost feels like there is going to be some stepping back before and that's a controversial topic. I'm sure the other would love to talk about it.
Sorry. In fact, what comes to my mind on the back of your previous question is while Tech Sweden, they have said by 2020 they'd want to be cashless. But that path, while it might happen subject to what Namita said, does not necessarily mean that the contra that as a country you need digitized currency from a central bank coming in to replace cash. So cashless society and the pathway to cashless society does not necessarily mean that central banks stop issuing cash as in notes and they convert into digital. So they're two different, potentially different things.
Stuart.
Yeah, I think the other angle is the governments themselves are encouraging cashless society. You've got recently India sort of banning the 1,000 rupee and 500 rupee notes. You've got the Australian regulator banning cash transactions exceeding $10,000. There's a revenue drive here. There's a real desire to bring about change and reduce the black economy and increase tax revenue, frankly. So, you know, the cashless society is one which carries data and insights and better reporting that governments are quite fond of.
Can I kind of say how, Sreeram, this goes to you, and how specifically will commercial banks have to change in kind of reaction to this?
How commercial banks will have to change? It's probably potentially a long answer, but what comes to my mind is one is you cannot run away or shy away from the need to invest in upcoming technologies to keep pace, because that's what the customer profile of banks are expecting. So think about it like this, that in a recent survey, some 75%, 74% of customers of banks said that they expect banks to respond through Twitter and within 1 hour of their asking us something. Now, we bankers don't wake up in 1 hour. We take our time. So we have to figure out how to respond to that. And secondly, there's a big impact on our people, and banks historically have had a heavy investment on people, and how you retrain people and how you deal with the people side of talent and skills is a big question. So I guess two things come to my mind as what commercial banks will have to respond to.
Sorry, maybe just to add to that, is I think some of these regulation that's forcing the open banking APIs and allowing people to interact with traditional banks is going to allow for the evolution of further platforms and the more democratization of product offerings, as opposed to in a traditional sense. I mean, you know, our generation and the generations before were going into a bank to get everything, right? So you'd go there and you get your loans, your mortgages, your investments, your financial products, brokerage, savings, checking accounts, everything. With an open banking structure, obviously that needs to be tied in with, we talked about this earlier, which is around the GDPR and kind of the use of data, but that creates a way where the bank can still be the front face into many of these things. They can be your safe, secure place if you need it. They can be there to provide KYC, AML constraints in the right ways and forms. But then they can also provide access to additional products to give people more choice.
Actually, kind of tying into that, I mean, Stuart, I know you've got some views on the open kind of banking system. So, you know, how will the rollout of open banking kind of impact the financial ecosystem? And I guess how does that mesh with the evolution of kind of blockchain and digital currencies as well?
It ties in very well with the society moving cashless. As people move cashless, as more transactions are recorded, each of these transactions gives rise to analytics and insights. And I think as a commercial bank or a retail bank, customers will come to expect that you understand me, you understand my needs because I'm transacting through you. When you go for a loan or when you go for a line of credit, you'll see a day very soon where the banker won't have to ask you for cash flow statements, won't have to ask you for your living expenditure. Open banking will deliver that because you'll provide access to a third-party app perhaps that will give your entire financial picture. It will also coach you on how to improve your situation to qualify for the loan, to get to that next stage of your wealth journey. And then that's going to change product design. To be a little abrasive, you might see the end of retirees running down the beach flying a kite. But more, you might see product design talking to my digital agent saying, based on your spending patterns, this particular credit card will suit you best because you don't need to be a member of this rewards program. You don't spend enough to justify that. Go for this option instead.
But the other side of it, from a bank's point of view on open banking, is actually the contra view, which is it's a challenge on security and how banks can. It's a bit of an irony that you, as a bank, you got to protect data. You know GDPR. You got to offer customers the choice. You got to allow them to own the data, etc. And you also got to open data, and you got to give access to data. And so the security dimension of carefully charting your course on how you strategize on open banking is still a question not yet very clear.
I'm not sure it's a good thing or a bad thing that we'll have no retirees running down the beach with their kite. But Daniel, do you have any view kind of on the open banking kind of evolution and how that kind of ties in?
Yeah, I think open banking is great because we've been looking at a lot of the APIs, right? And we're sharing APIs. You can go to Mastercard developers and you can see all these APIs that are available. I think it's great that banks are going to start having this open banking concept and via APIs share a lot of their services, especially with the fintechs that don't have access to what's going on. Obviously, we have to balance that with the data and everything. I remember a story. I was living in Tel Aviv in Israel, which is a fintech mecca similar to Singapore, and I was working with a small startup, and they were guarding credit card information, and they had their server. In renting an apartment in Tel Aviv, and some guys broke through the wall at night, took the server and flew to Bangkok to a hotel and said, give me $20 million, I release all these cards onto the internet. And so I was woken up at midnight, trying to figure this one out. So I was thinking, open banking is great, but we have to protect the system and the integrity of the system. And consumers come to their bank and they come to Mastercard and they expect that to be safe and secure. So we just have to balance those two things, right? The access to the data, the GDPR, and the open concept.
And open banking different for retail banking and different for corporate banking. There's a whole different set of drivers that you've got to be cautious about.
It's interesting. It sounds like there's a common theme here, both on the cryptocurrency answers and the open banking answers, that this is here to stay. It's going to change the game. Yeah. There's still flaws that we need to kind of, deal with. I think going into that, one of the things that was mentioned in the kind of spiel for this talk was the financial system is broken. And I guess, how is it broken? And what specific problems will be fixed by imminent technological shifts? Alokik, I'll go to you first on that.
I think to say it's broken is a bit of a stretch. I think it works. There's been challenges in different parts, and frankly, there's been innovation in different parts, right? So whether you're looking at it, as has been clearly said, whether you're looking at it as retail banking, commercial banking, etc., the system has been safe and secure. People have spent a lot into understanding the clients better in terms of security and cyber hacks and preventing some of that, in terms of product innovation, in terms of delivering results to clients. Now, I think the innovations that come in allow some of these things to be done much more efficiently. Whether you're providing, instead of building massive data centers, you can provide them in a cloud in a secure way. Whether you need to do background checks on people and KYC, you might be able to do them in a blockchain mechanism. Whether you, and the way in which you can market and target to people, you can use data in a much better manner. So I think these are ways in which the innovations that come into the financial system have been fantastic. Lowers the cost, brings better product to people, gives them better transparency on fees and pricing, etc. And so I think while there's been a transition, I think there's still a ways to go. And frankly, I think some of the examples that we gave earlier of the markets that were the most underbanked or the least penetrated have shown the maximum innovation because they had a need for it, rather than saying, okay, well, in China or India, well, you can go from being completely unbanked to suddenly saying, okay, everyone can go and have a bank account, but they may not need one. They can use a mobile wallet to pay different people and to access transactions, to move money around, whether it's going from urban environments to villages or others. So I think the innovation helps, and is driven by the maximum need. And I think that's where where you see the innovation coming out of, is places where the need is greatest. And I think that's why, and also in that vein, the regulation to support it, right? So in places like China, where I personally feel it's been the most innovative financial center in the world, it has allowed for it because the regulators have allowed some of these things to happen, where you can use your entire phone to do whatever you need to do across every transaction, pay people, send money to people, gamify some of that experience, and whatever else you need to do.
Yeah, there was a great article in Bloomberg last week which says the China payment system is making the US bankers nervous. I don't know if you saw it, but it sort of broke down exactly what
all bankers nervous.
Yeah, all bankers.
I think there are a couple of things here. I think more than broken, I think the banking system or the financial system was just waiting to get disrupted. I think the kind of inefficiencies that the banks have lived with or have allowed, and I think, again, being a banker, I don't like saying it, but I have to say that we, after all, make our money through inefficiencies. The more inefficient the system, the more revenue the bank makes. Sreeram is squirming, but I think that's a fact, right? When there are checks and when there are cash, we also make a lot of money in all of those. So I think it was waiting to get disrupted. And as you rightly said, in the markets where there were less form factors to protect. So there is no Visa, Mastercard, check clearing. Banks don't have a clearing system to protect. That's where the leapfrog into new technologies happened. And I think the regulators got a bit caught in that. If you look at Kenya, the regulators didn't know M-Pesa, which started as a student project, would become so big. I don't think the regulators in China knew that Tencent and Alibaba are going to completely dominate the financial system. So I think the regulators kind of got lagging behind. Whereas if you look at EU, there are loads of form factors to protect. Everybody's protecting their turf. And B, the regulators are protecting it also. So none of those leapfrog technologies will get in so quickly because there's revenue to protect. And that's why I think it's ripe for disruption, where disruption is bound to happen. I think where the banks are still going to lag behind, open APIs, etc., are going to create a democratization of banking. So all of us will have to look for revenue sources which are beyond what we have been used to, because everybody will have the same products, everybody will have the same capability. There will be no float, there will be no sitting on cash. Loan interests are going to keep getting, in the retail bank, they're going to keep getting squashed by crowdsourcing, crowd lending. And where the banks are still going to suffer, I think, if we don't get our acts together, is in data. You look at the Tencents and you look at Alibaba, and I deal with them, and you look at the M-Pesas, and the way they're using data, Facebook, while they're getting challenged in that space, but the way they're using it to figure out consumer dynamics, and Alibaba completely will probably one day dominate global trade at SME, etc., because they know exactly who wants to buy from where, who wants to sell from where. They'll be able to make the connections. Banks are, I think, still, really far behind in even trying to figure out where the data exists, leave alone what to do with it.
I think we're going to come back to the data a bit, but did you have something to comment on?
I might just say that apart from healthcare, as in pharmaceutical industry and airlines, banking industry is among the top three, the other two which I said, in terms of their appetite to invest in new technologies over the last several decades. So many things are broken, many inefficiencies, many things to change, but the willingness to be part of the future change, the industry has generally proven to say this is important for our customers. Now, we might still, and that's the reason why we are talking here on the future of money. So there is something positive about banking industry, just in case the audience walks away.
I couldn't agree more. And Salesforce gets invited into many executive teams at banks, and we're seeing executives come in from Disney, from McDonald's, from retail, from travel, because these are service businesses, and the industry is learning to be a service business. It's historically been about access to capital, but now that access to capital, there are alternative means via fintech or alternative lenders. Banks are coming to the realization that it's about being a service company. I want to buy shares in whoever makes post-it notes because they're on every wall. You know, the artwork's been taken down and people are talking about customer journeys. The biggest change, though, is that those teams that traditionally think selfishly, think about the business through an equity lens or a FX or a debt capital markets lens, are starting to realise that their microphone's broken. It's better now. Thank you. You know, but it's encouraging. It just means that
I've got a future in AV.
banks have seen what good looks like in other industries and when fintech came to town, and they're starting to bring individuals into the organizations who think differently to encourage these changes.
I think that's absolutely right, and that's a really interesting point, right? I think because the banks, financial institutions, or any of the big companies had gotten so large, you get siloed. When you get siloed, you start thinking in products or businesses or verticals. But the person who's interacting with us and a client or a customer doesn't think in products or verticals or asset classes or anything of that type. They think in their own customer experience or journey. So if someone wants to come in and use an app or a digital interface to interact with any of the banks or financial institutions, they want to access everything. They don't want to come and do FX or come and do a mortgage or come and do a sort of stock trade. So I think that's pivoting the way in which all of us, and the reason why there's all these large digital innovation teams at all the financial institutions is to kind of get their heads around some of these things, because we don't. The profitability and revenue piles sit in these neat verticals and you don't cut across them. And so I think thinking about that in more of a customer journey is very, very important. And this is where some of the technology and the innovation comes in to sort of eat everyone's lunch, because that's how they think about it. They don't know any other way, right? They're offering someone an experience.
How will this kind of feeds on from that kind of broken system, but how will AI, machine learning, data analytics kind of impact finance? I know you've got some views on this, Sreeram.
How will AI and machine learning impact in banks? This is my opinion. I've been in banking now for 25 years. This time around, the capability that machine learning and AI is starting to show as a technology is really, really powerful. And I say this in the context of having seen automation in banks in the previous so many years, robotics in the recent past, but prior to that, there's been so much. But now it is a combination of very smart, intelligent ability for machines to read, to understand, to interpret, and then to help you to make a decision. So if you think of corporate banking, if you think of international trade, that is generally the most paper-intensive, difficult, counterparties, customs, shipping agents, governments, banks, buyer, seller. It's the most complicated ecosystem you can have, which is why it has never been really digitized. This time around, I can see it happening. In fact, I might brag that in ANZ, we went live with one bit of it simply because we saw the promise of what machine learning can do. And it's very interesting. I mean, if it gets a document, a physical piece of paper, and it sees the word ship, it understands whether ship is a noun or a verb or a proper noun or what the container is. I mean, these to me, I'm a very traditional banker. My eyes pop out and I say, this is great. Now let's try and make use of this. So I think this machine learning AI capability will go a really future step in improving at least the efficiency of how banks are run. And the context of banks is declining returns and declining ROEs. And so I can see a big impact that ML and AI can do for banks.
I'm slightly worried that you're saying these machines have better grammar than I do, but Daniel, do you have any input on this?
Yeah, we just bought two really cool companies that I want to talk about. So the first one, how we hold our devices. Because I want to know if you're ordering your Grab when you're on the street in Beijing or wherever you are. I want to know if that's actually you. So we bought a company out of Vancouver, Canada called New Data. Looks at how the finger moves along the screen and how you hold the phone using AI, so we can do kind of deep machine learning about the patterns of the phone. And we bought another company called Brighterion out of San Francisco. And Brighterion is, again, very deep. So doing fraud and analytics on transactions. So again, go very deep Brighterion actually does a lot of stuff with governments as well, passport, when you're going through the passport. I noticed when I was in Hong Kong yesterday, they were monitoring your body temperature. So a lot of these things that we can use AI for in a very kind of cool way. And then the other thing is obviously data. So for those of you that go to like Yelp, I'm sure you all went and rated your lunch on Yelp and all of these sites, right? But we can actually tell when that actually turns into a transaction. So not just, I love this place, this burger joint, but I actually made a transaction. We're using AI to kind of go through these massive amounts of data. It's pretty cool.
It's interesting on that data side because, we're obviously, it's a very tech-savvy audience, specifically because this conference, but I asked you earlier on about what is the technology or financial shift that most non-fintech companies are failing to adopt and that they'll regret most in the next year's time, and you think that's data, don't you?
Absolutely. I mean, to me, it's the data that we're seeing and the way that it's being used across large technology organizations first, and then slowly being adopted across financial services. It's now going to become absolutely critically important to the rest of the world, across normal corporates, medium-sized businesses, et cetera. And I think that there's several different factors around it. So one is in the way in which you can better understand your consumers, your clients in every way. I mean, whether it's an email coming in, which is unstructured, and then being able to extract content out of that, to understanding structured data that someone has bought something from you, shipping receipts, invoices, et cetera, that you have information on. All of that is going to create a vast amount of data that will give you better insight into your clients than you've had before. No matter what kind of clients you are, you could be a manufacturing business, a services business, anything you want to. I think on the back of that, you then create two other outcomes, one of which is taking back control around your data. And I know this is, with the advent of sort of GDPR, this is another aspect that's becoming very popular, is how does the individual control their data so that the platforms don't necessarily own your data, you do. And so the same way in which you go and you have your cash or assets or others in financial institutions or brokerage accounts or something, you might have your data in an account. And that account can then be open to other people to be able to access, and someone pays you for that, right? So that's some way that you get control of your information again, and which is pretty powerful. The second thing to me is creating what is called alternative data. So financial information is what you get through Bloomberg, Reuters, and other things. Alternative data is data that corporates create, or about trucks going in and out of factories, or other things like that can tell you about manufacturing statistics or performance of a company, or other things along those lines. So with that, then the advent and the creation of platforms that let you buy and sell alternative data becomes really powerful. And here we've seen platforms of all kinds come up in this space, and the key piece is the standardizations of the terms and conditions to let you do this. Because today, if I want to come and buy, for example, Stuart's data on Salesforce, that's a problem because I need to set up and negotiate with them individually on the legals, the terms and conditions. Is he allowed to sell it to me? Am I allowed to buy it? What am I allowed to do with it? But if we can standardize some of these things, that concept of a data marketplace becomes really, really powerful. And then every company's own information can be monetized much like any other asset that they have.
I just want to say that Salesforce does not sell anyone's data. Trust is our number one value. I do agree, though, that the connectivity and collaboration will power the next generation of corporates. Look at the S&P 500, the top 5 or 10 companies, they're all platform businesses. They're businesses that rely on its community or its network to generate the value that then drives the value of the business. For corporates, you're going to have parties, you're going to have distribution channels, you're going to have even businesses that are parallel to yours. By creating data assets and enabling collaboration between your platforms, you'll create new value and it'll be more appetizing and more competitive to fintechs and other new entrants.
A couple of things here again. I think while data and financial institutions will have to really, they'll have to go really fast at getting organized about their data, understanding their data. I think the bigger threat that the banks will also have is that they're losing the touch points where the data is collected. So if the transactions are going to be done through mobile wallets, which are owned by telcos, or Tencent or Alibaba or Paytm, or even the central switches, which are creating, they give no bank a certain advantage. If you have a eNets, which is managing, or if you have a UPI, which is managing all the payments, there are no advantages a bank has. I think losing the touch points, so there's a speed of understanding my data and then rapidly losing the touch points. I don't know where the future of what we would see as a bank in the future, because I think that there will be more touch points with a Facebook, and if a WhatsApp becomes a payment platform, or if a Walmart wants to become a payment platform, I think they have a much bigger, touch point base than the banks have. And I think the second piece, and I know that this is happening in the banks, we're sitting inside and struggling now with the regulations that are coming in around data. So while we have not yet got organized about data, there is already regulation. So it's almost putting us backwards to say, oh my God, now what do we do? Because all of those other guys have already got the data and they're running along with it, but we are still struggling to. And now, if we are not allowed to put things on cloud, if you're looked at, our APIs are looked at more closely, then it'll be a bit more struggle. So I keep wondering about the future of banks now more than ever.
Yeah. I mean, talking about silos, the way I compartmentalize the topic of data itself in silos is data is now a new capability in the sense of how you collect, how you store, how you access, and how you manipulate it. So that's a capability. Second is it's a phenomenon in itself, because your ability to find different sources of data is manifold times more than your sources of data in the past. And the third is actually a people-related skill of whether banks have employees who understand the numeracy and the analytical skill set that you need to know what to do with all of this. So there is a profession that has come about, and I don't know how many data gurus are there in this room, who are developing a skill on how to make good use of it. And banks have to figure out who among their employee sets have either awareness or have interest or have adoption ability to make use of data that has now come about.
Interesting. I kind of asked beforehand, in what area is blockchain being underutilized? And the glib answer was everywhere, which I think is fair. But if you had to pick one place where blockchain is going to have the biggest impact on the financial ecosystem in the next few years, where do you think that would be? Alokik, do you have any views on that?
I mean, to me, firstly, on the question that you posed, to me, I haven't seen an application of blockchain at scale live in a commercial environment yet. Okay. Everyone has various deployments, trials going underway, etc. We haven't seen one at scale. In our own business, we're more of an institutional-facing business, so we see a lot of uses of blockchain in the middle back office processing, your clearing and settlement aspects, which take a lot of manual interface, a lot of time, energy, and effort, and tons of people to be able to do some of that. The second area, which becomes very, very valid, is in the ability more at a retail facing operation to probably validate people and sort of provide that KYC element in a more standardized form. But that is something almost where I don't see a company doing that, but I think that almost offered as an industry service or a body that can provide that to the ecosystem or the industry or the world at large. So I think those two are very, very valid. I think the other aspect that Sreeram alluded to is also in trade finance. I mean, there's massive, massive applications across that entire space. Everything from the time when someone sort of issues an invoice all the way through that it's on the ships and being shipped across somewhere, and then also being financed along the way. So those three seem big areas to me within the blockchain applications, at least from an institutional perspective.
I think the issue with blockchain, as we all know, if we worked with that technology, is that it does require a lot of bilateral relationship setting up or multiple relationships. And again, financial institutions are not known to be good at setting up these kind of massive alliances, and they come together and then they break up because somebody's not happy about the way the deal is going or the negotiations are going. And so I think that, and the second part in this is the central banks are really not supporting it as much as we thought they would. So for domestic payments, because of the fact that they can't handle the sheer volumes that are required for domestic payments, I think blockchain would not be something that would be used for domestic payment. And so I think the one big thing that it could really help in the future, and I think there are developments around that which we are working on, is in the space of KYC and sharing of data between institutions, which would then not require each institution to build a massive KYC or sanction screening system, because that's a huge cost to each organization. If we could share that data with lower cost and work on it, I think that would be one space where blockchain would be really, really powerful.
Certainly my memories of KYC would I'd love it if blockchain could help that. I'm not going to go to Daniel on this question just because there's a chance to promo the fact that he's actually going to give a presentation similar to this topic called The Future of Money, Crypto and Blockchain tomorrow, is it?
Tomorrow, yeah.
Yeah, so I'm going to skip Daniel on this. Stuart, do you have any views on this?
Well, it might not be banking, but I think that people want to know where their products come from more and more now. They want to make sure that there's ethical supply chain, that people aren't being exploited, that the goods that are in their products are what they say they are on the label. So I think the blockchain has a real application here to trace supply chains, related to trade finance, but more from the perspective of the buyers, making sure their values are aligned with what actually takes place in sourcing products.
Okay.
I might say, Mark, that it's my feeling that blockchain's expectations in the general public discourse has been pegged at such a high level that the actuals will inevitably lead to disappointment simply because you think it's going to solve the world. I think the better way to look at it is to use it as a capability in line with other new capabilities. So I tend to tell my team it is A for artificial intelligence, B for blockchain, C for cloud, and learn the ABC of banking and progressively, make a difference. Try to use this blockchain in a big conference setting to say it's going to turn the magic around. That's where disappointment comes up.
Okay.
So maybe just to add there, I think that's a very valid point, right? I think the construct of what is a blockchain and what it means to do is it's a database, right? And it's a distributed database. It's all it is. And so I think that at least 2 to 3 years ago, when the blockchain was just coming up within institutional settings, and it was kind of thought about as this magic fairy dust that you sprinkle on any problem and it's all going to go away, that just throw a bit of blockchain on it and we'll fix it. And I think we've kind of realized now that, one, it's not so easy. 2, you need a lot of coordination amongst the world to bring it together. And I think 3, it's not a solution for every problem, right? I think there's problems where you can just go and create a database structure or create some other structure that can help you solve it. It may not be solved by a blockchain. So I think evaluating the real utilities of it, what it's meant to do, and whether you really need distributed database to solve it is actually critical before you even start a project with a blockchain.
Just before we wrap up, I want to give each of you 45 seconds to kind of say, is there any, remembering this is the topic, the future of money, anything that you didn't get a chance to say, or anything, what's your one big takeaway that you would say to people from this kind of panel? Daniel, I'll go to you first.
I get to go first. So I think we're living in a time that most people don't actually even fully realize what's happening. So what we see in Mastercard and Visa and the big networks, and of course China UnionPay, is a totally digital consumer at a rapid clip that nobody anticipated. So it's obvious to me that the future of money is electronic, and the future of commerce is often commerce that happens on a device, a connected device. We're just making sure that it's safe and secure, and that it's anywhere that the consumer wants to be. So if it's 2 a.m. when I'm ordering my Uber, or it's 3 o'clock in the afternoon when I'm buying on AliExpress and Alibaba, that's, we want to be there when the consumer's there. So I think the future of money is electronic. It's yet to see if that's going to be cryptocurrencies or if that's going to be fiat currencies. We'll answer that question tomorrow, but...
Stuart?
Yeah. I think that money will follow good restaurants and Grab, and that is to have full transparency of what's going on, exactly how product is designed, exactly where my order is. I think you'll see that very soon. The other thing I think you'll see, which DBS have as their slogan now, is live more, bank less, which is to say that rather than just being a means to an end, banks will surround themselves more in life decisions and offer value add around purchasing a home, around going, traveling, and immerse themselves more in the act rather than facilitation.
Cool. Sreeram?
Future of money in 45 seconds. I think what was said is most likely to happen in the sense of it getting digitized. From a bank point of view, the challenge is to align your strategy to what you think the future of money will be, because banks is about money. So you got to deploy capital based on your strategy and the alignment to the future of money. I don't know the answer to that, but at least asking the right question will help you get somewhere there.
Asking the right question is often a good start. Namita?
For me, confounds me. So I have 2 daughters, 15 and 18, and they do everything on their mobile and their laptops. And I've given them every form of digital money. But Every 2 days, I'm taking out wads of cash from the ATM because every morning it's give me money, give me cash, and I know they're using it for wherever there is only cash, right? There is a lot of that, so confounds me on where this is all going. But it'll be an interesting dilemma going forward.
I mean, for me, I think that the most significant innovation in money was mobile, and has been mobile, and will be mobile in different shapes and forms for the forward. That was when the real shift happened, when the smartphones came in and realistically everything went on. Look across this room, everyone's on their phone in some shape or form, whether they're doing a transaction or they're chatting or they're buying something. So I think the future of money is most definitely mobile. And if anybody has an application in finance that doesn't have a mobile variant to it, whether we're going to interface with it through a device with a screen on it, or other ways, whether it's in your contact lenses or in your glasses or whatever, it is mobile. And so everything we need to do must be immediate, must be here and now. It must give you immediate gratification, validation, and a transaction reference and a confirmation. So all of that is going to continue to evolve to be faster, better, cheaper, and quicker, and it's going to threaten all of us in traditional financial institutions every day.
Awesome. Well, thank you very much. We have 12 seconds left, so I think that timing's going pretty well. I'd ask you all to please thank an outstanding panel. So thank you very much. Cheers. Enjoy your day.